YouTube, and then I'm going to share my screen, which is going to be my entire window. Yep. I'm going to share that whole window, share screen, boom. So now we have me here, and you guys, can you guys still hear me on Zoom? Somebody said that y'all can still hear me.
Yes, I can hear you.
Awesome. Okay, great. Thank you. So, guys, tonight we are going to be covering a lot of information. Okay, we're going to be covering a lot of information. And those of you guys who are going to catch the replay, if you guys are watching this, I'm going to be dual sharing screens. So just bear with me as I go through some information. But first things first, for those who are on tonight, let's go ahead and start with who. Before we do, I want to train first and then do Q&A, if that's all right. If we can hold our questions to the end, just so I can go ahead and get through this information. And there's some important things that I really have to touch on tonight, and then we can definitely do our Q&A. How does that sound for everybody? Is that okay? Okay, great. So everybody on Zoom here, Zoom, share screen, share Google Chrome. Membership. Okay, everybody on Zoom, boom. You guys should have access to the training portal. Okay, you guys should have access to the training portal. And I think I had to help someone earlier today with this because they did not have access to it, or they got kicked out. Okay, let me make sure y'all can still see everything. Boom, everybody can see it. Okay, so everybody should know this is our training portal to have like majority of the basic tax knowledge is going to be in this portal right here. Okay, majority of this knowledge is going to be in this portal right here. Okay, somebody's trying to get on but can't get on. Copy. Okay. Okay, let's see. And I gotta turn my phone off because I can't focus. All right, everybody, we have new numbers. Okay, if everybody was able to go through the tax training, you would have started off at the beginning, really got into like company branding. For those of you guys who are your own business owner, most of you guys are actually tax preparers. I'm pretty sure everybody has already signed up for like the e-news. Please, I hope you have signed up for e-news because there's so many IRS updates and things that have been going out. So make sure you definitely are signed up for that. But the main thing I want to talk about tonight is really walking you through how do we actually do an entire return. So from A to Z, number one, as a preparer, you want to know what your different filing statuses are. Make sure you guys are aware of the filing statuses. Now, one thing, if you've been tapped in, if you've been tapped into I just lost my whole train of thought. Sorry. If you have been tapped into the software trainings, then you will have seen that, when you get ready to complete a tax return, we'll go through that tonight. The first questions actually are filing statuses. But I had some people inboxing me over last week about filing statuses. I just want to clear some stuff up. It's only single, head of household, married filing joint, married filing separate, and widow. Okay. So some people who come to you, they're either going to be head of household, single, married filing joint, married filing separate, or widow. Like they're going to be one or the other. Okay. And remember, if you guys want to write this down and put a star next to it, only people who have children can file head of household. Now, if a person wants to file head of household just because they live by themselves, they cannot do that. Okay, you have to have an actual child in order, and it still shows that it could not provide anything. Okay, anybody who filed any children, those are the only people that can file head of household. Now, married filing joint, married filing separate, yes, they can still claim children as normal. But if a person is just single and they have 0 kids, they cannot file head of household. Okay. Now, if they're single and somebody is living with them and they're providing at least 6 months or more of support, yes, they can file head of household. Okay. But when you're processing the return, it is so important to know your different filing statuses. That's what we start at with taxes. Like we start really with the filing statuses. And then we go to like qualifying dependencies. This is going to be real big right now because a lot of people, the IRS, let me just tell y'all this, the IRS have sent out over 750,000 audits in the month of November, and people are just getting them today. Like a couple of my clients got it, and I know we tacked on our preparation. What it means is there's a lottery system that the IRS uses, and anything can flag a person. It could be any red thing. It's a lottery system, so their number could just be pulled, and if something just, the system just automatically sends people the letter and saying, hey, we want to review your return. We're asking for more information. I want everybody on here, if this is your first year doing taxes, second year, third year, do not be afraid of when you see people saying all the IRS auditing. Oh, it's a lot going on. If you keep your integrity and do good business, I promise you, you are going to be just fine. Okay? I promise you that. Most of the time, I mean, it was a couple of years ago, I was audited, and the only reason why I was audited because someone had filed my son, and they was trying to find out how did they file his social, and I filed my social, and I'm like, I don't know, y'all was supposed to make sure we both couldn't file, but at the end of the day, it took like a year, but they finally fixed it. So any random thing can kind of get you guys like a little bit scared, but don't be scared, okay? So we're gonna walk through on the entire process of you filing a tax return. Okay. So let's just say, boom, we have Angela. Angela comes in and just say, hey, can you give me an estimate? Right? Angela may say, hey, can you give me an estimate? And you may say, sure, if you're doing estimates, remember, as preparers, you can do what you want to do. If you want to do estimates and offer estimates, you absolutely can. But if you don't want to offer estimates and you only just want to offer tax preparation services, guess what? You can. Okay. It's so important. You can. You know what? I'm going to have to go into my other tax software. Hold on. You can. So when you have a person that say, hey, I would like for you to give me a tax estimate, and you may say, okay, great. How's your filing statuses? What do you file as? Do you have any dependents? What type of work do you do? Are you W-2? Are you business owner? Get comfortable with saying a couple of these questions because these are like your first interactive type questions when you are actually about to process a tax return, okay? And you're getting to know your actual client. I'm actually going to sign in. Some of you guys may have already received your logins from me recently. If not, they're still adding them in the system. Boom. Okay. Yep, they're still adding them in the system. But I'm trying to see why can't I go to start a new tax return? Yes, still not. Still not letting us do it. Okay. Number 3, once you are getting your client and you're saying, hey, this is the information that I need to determine your estimate, always make sure you let them know. You do not file taxes with W-2s, okay? Make sure you let them know. Am I freezing for y'all or can y'all see me okay? Y'all put thumbs up, y'all can see me okay. Okay, great. Make sure you let them know you do not file tax returns with any last check statements. We cannot do that. Okay, absolutely. It's like a no-go. We cannot file at all with any last pay statements. Okay. Another thing, when we're starting out, when we're doing our taxes, when we're onboarding new client, returning client, whatever, okay, we want to ensure that we are asking for a proper identification. What we're seeing flag right now a lot of times is we're not requesting all of the documentation up front that we should request. We will tell them to text it to us, email it to us, but we don't have the actual documentation. Here's what I want you guys to remember. When you are preparing taxes, you are required to keep 3 years worth of information. That does not mean you have to keep it on your personal computer. Remember, I said we can upload it to our software, right? Have anybody been on the software trainings? You guys have probably seen them show how we upload things to our software, okay? But what's required for anybody when we file taxes, what's required for anybody? Let's go to it. I'm going to share my screen again. Pages. Also, guys, if we get kicked off, just come right back in with the same link because I'm actually working 2 recordings here, Zoom and StreamYard. Okay, so we get kicked off. You guys just come on back in for me. Awesome. Okay. Awesome. It's crazy how these computers. Okay, boom. Awesome. I'm going to post this in our Facebook group. Everybody should be in the Facebook group from start to finish. This is what our process is when we are processing a return. Number one, of course, I just went over that when you first speak to the client, however they reach out to you, the first thing you want to do is start with your documentation. Okay. Make sure before you even give them numbers, before you process anything, they have a copy of their ID, a social security card for everyone that they're filing, proof of address. What does that mean? If they are filing head of household, which is an actual credit, now we have to actually show that we have seen that this person can file head of household. What do I mean? Well, I need a copy of their lease. I need a copy of their mortgage statement. I need a copy of a utility residential letter. Right now, like Georgia Power, you could go and log in and get a residency letter showing that you pay bills at this address. It's in your name. I have some type of proof of address. And when I'm thinking about showing that you not just live at this address, but you support this address, instead of just getting a utility bill, I'm gonna go up a step a notch and say I need your lease or mortgage agreement. Okay, because that right there kind of shows that, hey, okay, you actually can file head of household if we're thinking about filing head of household. Now, if it's married filing joint, if it's a single filing member, they still qualify for certain credits as well. So we still want to make sure just for everybody, let's just do it for everybody. That's like for me, I'm not going to be picking and choosing who I'm asking for certain information for. To make sure I'm 100% covered, I'm going to go ahead and ask for everybody. Okay. Now, let's look at this prior year tax return. The reason why I added this, guys, is because when I have new clients that come to me, and I think I told y'all that last training, I always ask them, how much did they receive last year? And if they say nothing, and I know that they work a job and they should, I'm going to go ahead and start asking questions about, okay, what happened, blah, blah, blah. But if they say, yeah, I got such and such back last year, or, I filed a return and got or if you want to say not how much you got back, did you receive a refund last year? Are you current with your taxes? They may say, no, I haven't filed in the last 2 years, but I want to file this year. Now, the IRS has done this. If you haven't filed in a couple of years, you can still come back and file this existing year like everything is all right. Crazy, right? So before, it used to be until you filed 2017, you couldn't file 2019 because you had to file 2018 too. Well, now they've changed it. So even if you have asking about prior tax situations, could possibly open you up with a client to process previous returns if they are behind, if that makes sense. Okay. Now, your intake questionnaire, you can kind of be however you want to be with it. But mainly, guys, if you stick to what I give and like in this step by step, you're gonna be all right because everything you need is here. Okay. Now, there's always different situations. Like now with dependents, because the IRS is flagging dependents so much, okay, I'm asking for birth certificates automatically. Yeah, if this your child, I just need the birth certificate. Let me just scan it, keep a copy of your record in case anything ever happened. Even, watch this, even if I review it, because that's a government document, if I don't take a scan of it, I want to still notate that I reviewed it, I saw it. That way, if this client was ever audited, guess what happened? I did see the birth certificate. I know that they got it. So if they need to provide proof, I seen it, so I know they got it. Okay. But if they have dependents, let's just go ahead and start asking for birth certificates because with all these audits going out, guys, let's just do it. Let's just keep it. I never asked for birth certificates. I'm gonna be fully honest with you all. I never asked for birth certificates. But after I've been seeing these audit letters, I'm like, okay, well, let's just go ahead and get it. Let's just go ahead and ask to have it so that we won't have to run around town. Now I got people trying to go have to go to the State Department and print a birth certificate. I'm like, oh God, so let's just go ahead and ask for it. Let them have it. Head of household, remember, lease, mortgage, some type of bills to show, even if it's not a head of household. Even if married filing joint, married filing separate, if they still filing an address, single, they still filing an address. If anything, if they live by themselves and they're getting other type of credits, I need to be able to show that they're supporting the household. Okay. Now we're going to get into filing business returns a little bit tonight, because you guys are going to have some people who possibly you're going to be filing business returns for them. Okay. Schedule C. Those are the biggest red flags. Schedule C is the biggest red flags because most people will overfile expenses on their returns to get the refund higher. Okay. That is now flagging 100%. It has to make sense. If you just remember this, the return has to make sense. You're going to be okay. Okay. If you have any clients who are reporting any side businesses, listen, the tax code, I have read it over 400 pages. I've read it multiple times. The tax code says that a client does not have to make $0 to file anything on their return. If they have a business, they have an EIN number or a state registration or a business license, even if they're sole proprietor, they can file anything for that business. Okay, so keep that in mind, because I met a couple of people today who didn't even know that, and they literally got businesses just sitting on the shelf that could help them be some good tax write-offs. Speaking of that, I'm doing a free training this Sunday night for taxpayers, showing them how to really maximize the tax code for their lives. So, for instance, if a person does hair on the side, if a person sells books, if a person bake cakes, if a person sell clothing, no matter what it is, or if they have a full business, you need to let them know that you can only write off what they can document. Okay. It may take them some time. They may need to go print out all of their receipts. You're going to need receipts. I'm telling y'all, get receipts. Get receipts. Okay. Only file what they can prove. Okay. Get receipts. Have them make sure if they want to show that they have income coming from Cash App, Zelle, Venmo, PayPal, any third-party company that doesn't really give a section to show what this actual this transaction is for. Tell them that yes, we can do what's called reconstruct their income, and we can use those as proof that they are receiving income from that. But we have to be able to write who paid them and for what. Okay, so just remember that they don't necessarily just have to have 1099Ks from a Square or from a Stripe account. No, if they don't have that, that's fine. If they receive cash, many businesses are still cash-based businesses. Well, how can we prove that they got all this in cash if it's cash, right? We can only write it out, right? But we have to make sure, write this down. We are taking detailed notes, because at the end of every return, we have to do what's called write a due diligence note. Okay. In the due diligence note, we have to notate everything from A to Z about this return. Meaning, hello, I met Brianna Anderson today. She is a brand new client. Before starting her return, I verify her ID, her social security card, all socials for her children, birth certificates for her children. I verified that she has head of household by looking at her lease or her mortgage statement. Her son is in college. Speaking of college, that's next, 1098T forms. If you have anybody who wants to file any 1098T forms, you need the 1098T forms. Okay. Now, what is a 1098T form? That is a tuition form that you can Google what it looks like. In the software, though, watch this. In the software is all yes or no questions, guys. It's gonna say, does your client have a 1098T that they need to file? You're gonna put yes or no. If it's yes and you click yes, the software is gonna say, enter the number that's on line 1B. You're going to look at that 1098T and you're going to enter the number that's in line 1B. It will automatically qualify them for any credits that they qualify for. That's why I love our software. It's 100% state of the art. But you have to have that 1098T. You can't just let them tell you, oh, yeah, I went to school last year. That school may not even qualify. Come on. You need that 1098T form. So in that due diligence note, after review, client stated he went to college last year. To finish his such and such degree. I verified that by looking at his 1098T form, in which I use the 1098T form information to populate or enter into the system. Period. I'm notating as I go. Boom. If they got any new home purchases, now if you own a home, they're going to send you forms for your home interest, right? We're going to input those in. Everything we do Every single thing we do, there is a box for it. Okay, we'll get into that. There is a box for it. Now, guess what? No documents, no returns. No document, no return. Save yourself. Now the IRS is penalizing tax preparers, $4,500 per return. That is unethical. Okay. Not only are the taxpayer getting audited, because once they sign a return, they're signing off that what they think they've done is right. What the preparer did is right. But for you, save yourself. Trust me, you're gonna have them people come and say, "Oh, I did this, I did this, I did this," but there's no paperwork for it. And here's what they tell me. Well, somebody else told me such and such estimate. That's why I'm not wasting time doing estimates this year. Because you want to go to the person who's gonna get you the highest pay, but then get audited and then get jacked up going to jail, you're gonna be blaming somebody. No, I let them know. Well, okay, thank you so much for allowing me to assist you. No documents, no return. Okay. Speaking of due diligence, here it is right here. As you guys can see, I've been in the tax industry so long, I can teach without a document. Okay, but I just put this in here because we're gonna add this to the tax Facebook group. Verify their identity, ask those questions, check those documents. All right. If there's any red flags, mark any red flags. What does any absolutely, yes, ma'am, absolutely. What are red flags? Red flags are like, let's say you got a person who they're sending you other people's children that's not their children. That's a red flag, because if somebody else been filing this child a year before, somebody else a year before, like we got the IRS red flagging people now for their own children. So they're definitely about to start red flagging for other people's children, which is why I've been telling all my clients, go ahead and get a security pin, identity protection pin for your child on the IRS website, so that when we do file your return this year and you have that pin, that pin is just an extra level of security to show that you have authorization for this child. Okay, they can do that on the irs.gov. If they make an account, go to my irs.gov, do my account. My account is power packed now. They let you go back to look at all of your transcripts. If you want to get an identity pin for yourself and your child, you can do it there. If you want to see if you owe any back taxes, like if you have a client say, well, I do owe the IRS, I be wanting to know how much you owe. Because here's the thing, if you owe and I do your taxes this year, I'm not going to get paid from the return, because the bank is, if you owe, the IRS is going to take whatever you get and put it towards your old payment. So that means I have to charge you up front. Okay. When you are filing taxes and we're e-filing taxes, the tax bank takes your client's check, pays you, and then pays the client same day. But if that client owes, even if you file the return and e-filing and everything, even if you put, hey, I'm charging this client $400. If the client owes anything, it is a high risk that they're going to put that entire return to that debt, and you're not going to get nothing. So asking these questions, guys, is so important. Once you completely onboard, then you go into your preparation, right? Because you can really do your due diligence before you start preparing. That way, when you do prepare the actual tax returns, you can go through it easy and breezy. It takes me about 10 to 15 minutes with a standard W-2, a standard head of household, even married filing joint person. It takes me about 15, 20 minutes. Super easy to do a return because I handle most of my due diligence ahead of time. Okay. We'll get into return preparation when we get ready to actually do the software. But just remember, guys, you're going to need your client if they want direct deposit. Now, I got checks in the mail this week. Check came in the mail this week for tax season. What does that mean? Did the IRS, I thought they said they were going to stop paying checks. Yes, the IRS is not going to cut direct checks from them anymore. But the tax bank, when a client wants to e-file, when they want to e-file, they can either go direct deposit or they can do a paper check. Unfortunately, we don't have the debit cards this year. I don't know why, but we don't have the debit cards. Unless I just didn't go through it. Nope, we don't have the debit cards this year, and I called to find out why. But I see that they only have, the checks, just the checks and direct deposit. So even if your client don't have a bank account, they could just get a paper check. How that works is if you're a tax preparer under me and your client opts in for a paper check, okay, I print the check here and I send it directly to the client, okay? I do it here and I send it directly to your client, okay? Now, it is a extra fee for a check because we want to one day it, get it to them as fast as possible. So when you click check in the system, you're going to see an automatic fee of $25 that comes out of the return, not out of you, not out of your money, out of the return for your client, so that we can one day them their check. Okay, because nobody can just print on regular paper. You have to have the check. If you're on here tonight and you're ERO, you're your own business owner. You have your own checks. You're able to print your own checks. Okay, so don't forget that, guys. I don't know why. Let me see. Will it let me do this? I'm supposed to be on my pro account. And Cedric Anderson, if y'all don't know who, that's my husband. Cedric Anderson changed the card on file and put his card on file because he was using my Zoom. And so now I need to upgrade my Zoom. Hold on, guys. Give me 1 second. But while I'm doing that, let me keep talking. So that's checks. Anybody have any questions while my screen is loading? Because I'm about to upgrade this meeting real quick before it cuts off of us. Anybody have questions on anything I went over so far?
I have a question.
Yes, ma'am.
So you were talking about estimates and it was something else, but I want to know what was the difference between estimates and whatever other thing you were talking about.
So when you do an estimate, right, that's just where your client just want to see how much money you can get their refund. It's not the actual amount. It's only like like let's say it's really close though. So let's say we have what's called an estimate calculator where we can take their W-2, we can put in, the numbers of how much they made, how much taxes they paid. We can do all that. And it's going to give us like a rough draft. It's going to give us a rough draft of how much that refund is going to be. And so you're actually giving them that amount as an estimate. So some people say, hey, can you give me a free estimate? Because, that was like popular back in the day because free estimate kind of brings in more clientele possibly. But now a lot of preparers are not even doing free estimates. They're only working with people who say you want me to file your taxes? You want me to be your tax preparer? Well, let's get the process started. So that's the difference between an estimate and actually preparing. When you're doing an estimate, you're not processing the return. You're not sending it through. You're not getting their banking information. You're not getting none of that. You're simply processing on the estimate on the calculator so that you can see how much money will they possibly get for that tax season. Does that make sense?
Yes, it does.
Who's that? Who's speaking? So I know.
Erica.
Okay, yes, ma'am. So Erica, it's actually up to you if you want to offer estimates. You don't have to. Okay, it's up to you. I did
this being my first time. Do you recommend? I was listening to the train. I actually don't want to start that, but do you recommend it as doing it? This is my first time.
Well, honestly, I'm gonna tell you, even though it's your first time, it don't matter. It don't really matter. If you want to feel like that's gonna draw more clientele to you, then do it. Because that's why I did it in the beginning 7, 8, 9, 10 years ago. I don't want to do it now because I have an existing clientele base. You see what I'm saying? So I don't have to. But just know that when you're doing estimates, you're doing work up front that you're not even paid for, possibly won't get paid for if they decide the amount that you gave them is so low and the person they went to the day before gave them like 1,000 or 400 or even 30 cents higher. They decide to go to them and you done did all that work for free. That's really why I'm not doing it anymore.
That makes sense.
That makes sense, don't it?
Oh, yeah.
Hold on 1 second, guys. I need to see something quick. Babe, is your card number ending in 7920? Yes? I need to pay my Zoom. I Cash App you. Okay. I'm sorry, guys. I was upgrading my Zoom on my husband's card, not my card. Wait, it's not working. $17. Sorry, guys. Yes. Okay, any more questions on that, guys? Any more questions on that while we getting this together? Nope, no more questions on that?
I have a question.
Yes, ma'am.
So I have a potential client that have not filed in a couple years.
Mm-hmm.
And she does not have W-2s. She asked, could she use tax transcript? So, like, how would that process work for you?
Okay, good question on that as well. So, I have used tax transcripts to file returns because whatever's on the transcript is correct. Because the transcript is literally the company that she works for. They have to send in a copy of the W-2 to the IRS and send her a copy. So whatever the IRS have on file is 100% accurate. Okay. So what I've done is I'll have them go to their My Account, print those it's called wage transcripts, print those out, and I would use those to file the return. The only thing is on the wage transcripts, it doesn't have the company's EIN number, which is a big problem because with the IRS, when you are filing taxes and submitting, that EIN number, if it doesn't match a company in the IRS system, they will automatically kick that return out and reject it. Okay, great. We're on pro now, guys. Okay, that worked. So your plan has been restored. Oh, okay. So they need to restore me here then. Does that make sense? Diamond, was that Diamond?
Yeah. Okay. So that leads me to another question.
Okay.
Should she not like? So I don't know how far back. I think she said she had filed since like 2022 or something like that. Should she just file from where she is? If she don't have the W-2s, how would she be able to acquire her W-2s, or what direction would I tell her she should go?
Okay, wait. Ask me that question one more time. I'm sorry.
Sorry, my son was over here clapping.
It's okay.
But so should I tell her to file from this year out, or how should I tell her to go about getting W-2s, or what would I need to help her?
Okay, great question. So you can use her wage transcript, but if she still knows the company, if it's like multiple companies, she would need to call that HR department and get the EIN number, or let them know that she would like a copy of the W-2 if that's easier for her. But you just have to have the EIN number. And unfortunately, on the wage transcript, the EIN number does not show. It shows the company name, the employer, the taxes, the amount, everything else we need. But it does not show that EIN number, and that's mandatory that we need to file. So if I were you, I would have her to call, if she can, call the HR department. They could possibly, some people have given me it over the phone, giving me the numbers over the phone. You can ask her to get that EIN number over the phone. And then, I'm sorry, can y'all see me?
Thank you so much. Jill.
You talking to me?
And I gave your friend the money already.
Keisha.
Yes.
Keisha. I think you unmuted, Keisha. Let me see.
I'm so sorry.
It's
I'm
okay.
So sorry.
I thought somebody was talking to me. Sorry. Okay. So Diamond. Yes, and you can still help her. When you log into the software, what you're going to do is at the top right-hand corner, which I can actually show you, you are going to actually go in and you are going to just change the year at the top to here. Zoom. Share. Okay, guys, we got that fixed. Praise God. Share screen. Entire screen. All right. So you could go right up here, Diamond. You're going to change the year up here. So let's say if you're doing 2023 for her, you're going to click 2023. And then right here is going to say start new return. Okay. It'll say like start new return right here, like a button, start new return. Now, if you are doing 2020, you can go all the way back as long as it allows you to go back. my computer would start freezing up. I tell you the truth. Let me know if you guys can see me. Did I freeze on you guys? Can you guys hear me?
We can hear you.
Oh, okay. So you see right here, you could drop down there and you could go back as far if you need to go back to 2020 to file returns. 2020 is the last year we could e-file. So guys, this is our software here. Unfortunately, I can't click the start new tax return yet because that hasn't allowed me to do so. But what I can show you is some stuff here so you'll know if you haven't been able to get on the software training. Let's see. Yeah, I can't right now. This is crazy. I can't right now. But our software is very super easy, guys. Super easy. Literally walks you through step by step. Yeah, walks you through step by step. So I hope that was able to answer your question, Diamond.
I have a question that's kind of sort of along those lines.
Okay.
So this potential client was working for an entrepreneur.
Mm-hmm.
I don't really think that the entrepreneur had their business in order, but they were getting paid via PayPal.
Mm-hmm.
And when they tried to get their whatever printout that they would get from PayPal, showing that they was receiving money, payment through receiving their income through PayPal, PayPal couldn't provide anything for that particular year. And so how would you handle something like that?
That's really good. So for me, for PayPal for your person, right?
Yes.
Did your person go log into their PayPal account and just go to payments received screen?
Yes. So you could see the history of like the payments that they received. They would have to, print it out and try to go through and highlight what was what. But they didn't get they couldn't have maybe like a 1099 or any type of W-2. All it shows is that they received
those payments. Money. Some people do that. Now, There are a lot of companies, there are a lot of like your person would be a sole proprietor, right? Meaning their employer did not give them a 1099 miscellaneous or 1099 NEC. So they're like pretty much under the table. So what that means is tax time, your client still has to file that income. And legally, this is how they would do it. If you are the preparer, they would document, give you amount of all the income they've received, right? And from who, those screenshots or whatever. And when you go and do their return, you're not putting them as a W-2 because they're not an employee. You're going to do a Schedule C because they're a sole proprietor. They're making income by themselves, right? See what I'm saying? And so when it's time to start that Schedule C, I don't know if you saw one of the trainings that I did in the tax portal when we did a sample of a Schedule C. When you do new business, they don't even have to have a name registered, no Secretary of State, EIN number, none of that, because with most sole proprietors, they're doing business under their social. Only thing it said was what type of business it is. So let's just say she's an administrative assistant. When it said description of business, that's what you put, administrative assistant. And the next screen is going to say, oh, how much income did they make? And that's when you will put that whole amount in. Well, what are some of the expenses that they had? If she had any type of expenses while working with this person, whether it's mileage, whether it's office, whatever it is, any equipment, utilities. I think we put that in the list too, guys, the other day. On the files tab in the Facebook group of everything a person can file legally as a sole proprietor or LLC business owner. Does that make sense for you? Is that Erica?
Yes.
Okay.
That makes sense, Erica.
Yeah, that makes sense. So it's not that you have to have just a 1099 or some people work under the table, but they still, if they want to file taxes, they still want to report that income, they can still do that under their social.
Okay.
Thank you. You're welcome. So here, guys, let's go over to our Zoom. Share. Let's look at some information for tonight. Here we have our new standard deduction amount for single, married, filing, joint, head of household, or married filing separate, actually, too, so that you guys know, disregard these little extra things here. But what does this mean? We don't have to know these numbers ourselves, because remember, the software calculates all the amounts. The software calculates the credits. They'll know if a person is over standard deduction or under standard deduction. The software calculates every. Oh, my screen update. Sorry. Thank you so much, Diamond. Okay, wait. It's still not updating. Resume. Okay, that should be showing now. Yeah. Okay. The software calculates everything. Okay, it calculates everything. But just so that you know, these are like the standard deductions. Standard deductions literally means what a client makes over these amounts, their tax refund is going to start going down. If we can put that in most simplest terms. So if you are a single filer and you have children, but if you make, let's say you had a household and you make over $23,625. You're going to get credits for your children, but you're not going to get the full amounts. Y'all be seeing when people be like, oh, how they able to get, if you got 1, 2 children, you automatically get 6,000. Those are lies. You pay right by those little signs outside. Y'all, them be lies. Nobody knows how much a person is going to get per child, because it's based on the standard deduction. It's based on how much they made, how much taxes they paid in, to know how much of the credit they qualify for. So example, if I got 2 children, my son just turned 18, he no child no more. I'm not going to get, he's going to be a qualifying, he's not going to be a dependent anymore under me, because he lives with me. So, but he's not going to be just a dependent. So I'm not going to get the child. He's going to be just a dependent. I'm not going to get the child tax credit. That makes sense? So sometimes people be saying little stuff and y'all don't let it move y'all anything. The system calculates the numbers. And whatever the system put is right. I'm going to tell y'all tonight, make sure some of the things to make sure is you put the right date of birth in. Double check your date of births, okay? Double check your social security numbers. Double check where you're entering the right personal information, because 1 digit off on that date of birth, 1 digit off on the date of birth, guess what it can do to you? That 1 digit off. It's going to mess up that entire return. All those people numbers are going to be wrong, because let's say they got a child that was born in 2020. Let's say 2024, because we're in 2025. The younger a child is, the more of the credit you get anyway. But let's say we messed around and put that child born in 2017. Their whole credit gone. Okay? And don't worry, if you're prepared under me, you can't just send returns off. You can only put your returns in review. So I will go through and look at every review. My corporate team goes through and look at every review every return we can before we e-file your return off. So once you complete a return, it's going to be a button that says, would you like to submit this for review? And you're going to click yes. Once we review it, then we submit it to the IRS for you. So don't worry if you feel like something is going to be wrong, or you didn't process something right. Don't worry, because we go through and we do double check. Okay. Now you guys know we got the big beautiful bill that's kind of like coming into place, and just some things that's going to be added. I'll put all this in the Facebook group. Under the big beautiful bill, individuals aged 65 or older are able now to claim an extra $6,000 deduction in addition to their regular standard deduction for age or blindness. This is something that will automatically be calculated in, guys, based on the date of birth that we put in. Okay, so all of the new deductions and new credits and all that actually comes automatically. You don't have to, try to put that in at all. It comes automatically. Okay. Another difference, of course, you guys probably saw the child tax credit increase for this year. The maximum credit for any qualifying child under 17 is $2,200. So that's just the child tax credit. That's not the ACTC, which is the additional child tax credit. Okay, it's 2 different ones. Okay, this is a refundable credit. Okay, refundable credit. And so ACTC, which is additional child tax credit, that credit is still in place up to $1,700 this year. Okay, up to $1,700. Remember, the amount that a person gets is based on, okay, it is based on how much taxes they paid, how many deductions they already have, and how old the children are. Okay, got me on that. Now, let's see what's the new stuff. Earned income tax credit. A lot of guys, oh my gosh, a lot of audits that just came out was because of this earned income tax credit. They want people to prove of their earned income. They got the W-2s. They know the people work. They got the 1099 miscellaneous and NECs. They just want to get on people's nerves. Oh, they get on my nerves. Anyway, I had to do a little rant. So for 2025, these are the maximum credit amounts for the earned income tax credit. Okay, that's some pretty good amounts. These are some pretty good amounts for that earned income tax credit. That's why we have to they want to make sure that everything is qualifying. Matter of fact, I can tell you guys here. I can tell you guys here what on one of the audit papers for the earned income tax credit. Okay, for the earned income tax credit, here's from one of the audits one of my clients got. In order to prove that you can file the earned income tax credit for your qualifying children, each child that you claim must have lived with you for more than half of the year. Remember, that's 6 months. You must live in the United States. To prove the child lived with you, you must either have documents to show your address, your name, and the child's name. So this could be school records, medical records, court documents, information from the child's school, child care provider, child care health facility, your employer, landlord, property manager, church or place of worship, or shelters. Each child that you claim must be related to you in one of the ways below. If the child is your son or your daughter, you are automatically qualified. If they're your grandchild or great-grandchild, you will have to show one or more birth certificates showing that you are related. See how they go on deep, y'all. So that's why I say just let's go ahead and ask for it. Let's go ahead and ask for it. Matter of fact, I had one of my clients go ahead and get a notarized letter from her daughter saying that she gives the mom, which is the grandmother, rights to file her child. She put in the notarized letter that her grandmother supports the child over 6 months of the year, and she was entitled to file her 100%. Okay, matter of fact, I got that letter right here. Okay, I got that letter right here. IRS doesn't care what is on. If it's notarized, y'all see that? If it's notarized and stamped, it's proof. Okay, we are keeping all proof. All right, y'all got me on that? All right, let's see. All right, I'm gonna stay on time. For clarification for the EITC, do you automatically get the max amount? I don't have a full understanding about the EITC in regards to the amounts. Yeah, so with the amounts, it's based on the child, and again, it's based on the filing status of the taxpayer. It is based on how much they made, and how much income, how much taxes they paid in. So it start phasing out once they hit those standard deduction amounts. Things just start going down. Like, for example, for married filing joint, if you have 3 or more children, the phase out begins at the amount on the earned income tax credit. So if we go back to our earned that standard deduction on our earned income tax credit brackets, I don't think we got there yet. We'll see at that amount. I actually put it in the Facebook group. We'll see how much of the credit that a person qualifies for. Because remember, let me just open up. Let me see, open it. I make it just because I pulled all this from the IRS site, so I make it just pull it up here. Okay. Let me see if they're going to give us a table. Yep, here it is. So it's based on your adjusted gross income, of course, your investment income, your filing status, and how many children. So for 2025, if a person has, let's say, 1 child, the maximum AGI they can have for that earned income tax credit is $50,434. But the amount of the entire credit, remember, that's a refundable credit. So the amount that person get is just because they make under this number don't mean they're getting the full amount either. It's based on how much taxes was paid and how much income you receive. Okay. So these are just the maximum amounts of credit. Okay. These are the maximum amounts of credit. And that's just for the earned income tax credit, the EITC. Okay, yes. Okay, who is this, Lala? Let me see who you are. Yes, we sent out invites. Hey, Lala girl. Okay, I see who you are. We sent out invites like 2 weeks ago. Yeah, like 2 weeks ago to the email. Let me verify because let me make sure this one is your email. Yeah, because I have your email saved. I will send it to you as soon as we get off. If you do not have it, absolutely. I will get that to you. Yes, ma'am. I'll make sure. You're very welcome. Okay, that's fine. Yes, ma'am. I understand. Thank you so much. So, guys, that is the earned income tax credit. Okay. And then while we're here on the IRS site, let's just stay on here. We could just stay on here and let's go to the education credit. Remember, I was telling you about the American Opportunity Credit. There are different credits that can be filed when a person goes to college or goes to any type of secondary education. The American Opportunity Credit and the Lifetime Learning Credit. So you can only file one of the credits per student. The system knows which credit to file based on the information we put in from that 1098-T. Okay, it's going to ask certain questions like, and this is what you may have to ask your client. You know, if they've been in school 4 years, then of course, after 4 years, they won't be able to qualify for all of the credits. Okay, so for instance, for the American Opportunity Credit, you can't get that after 4 years. So if it's been filed already 4 years straight, then they won't be able to, that the system is going to automatically not add that credit in. Okay, see here, right here. If you see right here, it says the AOTC is available only if the student has completed the first 4 years of post-secondary education. How many years is the credit available? It's only available for 4 years. Okay, 4 years. Now, the lifetime credit, the lifetime learning credit is available unlimited. So let's say for the first 4 years, if a person wants to go ahead and they've been going to school, file that 1098-T, they're going to get that bigger credit because they're within their 4 years. But let's say it's taking them a long time. They in year 6. Okay. They won't get the American Opportunity Credit, but they will get the Lifetime Learning Credit because it is available for unlimited number of tax years. Okay. Somebody asked me before, does it have to just be a college? Let's go over that because that's very, very, very important. The school must be an eligible education institution. Okay. Eligible education institution. And when you get that 1098-T form, see, check if the school issue a form 1098-T tuition statement. Eligible institutions are required to issue this 1098-T. If they don't get a 1098-T, they're not going to get it. I had a lady who went to beauty school, and in beauty school, she thought that she was supposed to, I was going to be able to fire her. She's like, I can get the school credit. I was like, no, you can't. She's like, yes, I can. I said, girl, listen, you can't. I'm telling you. Did you get a 1098-T? And she went up to the department and they were like, what is that? No, because that is not that type of schooling. It has to be an eligible institution. Okay. So these are some questions, guys, also that you can ask. They're on our checklist as well. When we're actually going, matter of fact, let's go to the checklist back again. When we're going to the checklist, they're actually on our checklist. Let's go over here. StreamYard. Okay, y'all still with me over there. Great. I'm going to make sure I'm still recording.
Yeah, I have a question about that.
Yes,
about
ma'am.
the schools and things like that. So, I took a continuing education. Well,
yeah.
So I worked with a coach before, right?
Yeah, you could file that if you got a business. That can be filed under your business as a professional development. That could be filed under Schedule C.
Okay, but if you don't have a business, it can't be filed.
Mm-mm.
Okay, got it.
If you were itemizing your taxes, you can, but itemizing means Remember, that means you made more than the actual standard deduction amount and you have more expenses than the standard deduction amount. So if you were itemizing, meaning you were calculating every receipt that you have, which a lot of people don't. If you're making like 200,000, even people who make right now 150,000, they still doing standard deduction. So if you were itemizing, you were bringing all your receipts, then that would be a great receipt to add because they will bring your amount owed in taxes down. But if you file every year standard deduction and you're not itemizing, that won't be added. So what I recommend you do, because I'm a girl of the tax code, you need to do a business. You need to get your LLC EIN number, even if you want to do it under your social as a sole proprietor. Because remember, the law says that if you do any type of business under yourself, even if you're, not getting a 1099 form, 1099 NEC, any of that, you can still be a sole proprietor and work for yourself. So even if you're about to launch a coach, let's say you're about to launch a coaching business, and people who invested in my tax course, I be telling them, y'all go file this stuff off. Go and use it as a deduction. You're not going to get the money back, but it's going to be a deduction for you. So let's say if you owe any taxes, let's say you're supposed to get $4,700, but because you didn't pay enough, you only get back $1,400. You can go add this deduction of $1,200 down, and that money that you were supposed to get before, you now get it, if that makes sense. So a lot of people be leaving money on the table because they don't know to go ahead and open a business so that you can legally write this stuff off. Because anything like utilities, I put the list in the group, but utilities, professional development, contract labor, marketing, advertising, supplies, equipment rental, space rental, travel, food, taxes and licenses. Girl, it's so many. Tax code legally says we can file those things. And so let me give y'all a prime example. I'm able to deduct my home office is like 10% of my home, square footage of my home, according to the IRS. I work at home 100%. I run 6 different businesses from this house. I want y'all to see my strategy here legally. 6 different businesses from my house. Okay. I can calculate all year what my utility is for the year. And I can pull 10% of my bill times 6 businesses and write that off as a deduction for utilities. My phone bill. My phone is a work phone. I use this as a work phone. So 12 months of my bill is 100% deductions to write off. Okay. Anything I buy for me, if I go out to eat, I promise you I'm going to talk 30 minutes. If I pick up the phone and call a client, if me and Cedric talk goals, if we talk business building, whatever, 30 minutes is what the law has required for that to now be a write-off. I'm writing out that whole meal. If I go out of town for a vacation, I never go for just a vacation. I am going for some type of event in the area. I'm going to find a business development event, marketing, trading, something. I'm going to find a learning event. And I'm going to go to that event, even if I go for one day. That entire trip becomes a write-off. I can write off all the food. I can write off all the travel. I can write off the hotel. And I can write off what I paid for the event. And I went originally for a vacation, but I use who I am as a business owner because I am the business to now that's a write-off. So I want y'all to that's how the wealthy people stay wealthy. I'm going to be talking about that on the webinar Sunday night. That's how the wealthy people stay wealthy. They utilize and leverage the tax code. Okay, so for those of you guys who are on here, even if you're working as a preparer right now, you can still start your own business. You are still a sole proprietor. Okay, you're still about to be making money when people are about to be. I'm about to start paying you guys, or if you're your own business owner here, you're paying yourself. You're getting a 1099, so you are able to file your own expenses. That makes sense?
Yes, it does. So even if that business is closed, long as there was personal development during that time, would an amendment have to be done or what?
So when you say that business was closed, are you saying that you called the IRS and canceled the EIN number, closed that Secretary of State? You saying that?
Yes.
Okay. Mm-hmm. So what you would need to do is you would be filing it under your social as a sole proprietor. So you talking about a past year?
Yes.
Correct. Yeah, you can file it. You can amend it and file it as a past year. Okay. Just have your documentation ready to show. As long as you got a receipt. I mean, is it worth doing the amendment? See what I'm saying?
Probably so, because the class was expensive.
Oh, okay, yeah, girl. Yeah. You can amend it for sure. Yep. And then so when you create that Schedule C, you're not going to put anything for business name, business EIN number, for address. You're going to put your address. And when it say description of business, you're going to have to put what you like. What industry was that class in? Let me just ask.
Coaching.
Oh, okay. Yeah. Oh, for sure. Girl, if it's 10,000, 5,000.
Oh, it's more than that. So, yeah.
And you don't have a business now?
No. That business is dissolved now.
Girl, what? Okay. Girl, I paid $50,000 a day in my coaching business.
Free, tell the girl.
This was me. I was taking a coaching class.
Okay.
Well, I paid that amount.
Okay. But you ain't, so you just not using it to start your own coaching business yet?
I had started it, but I'm not doing it anymore.
Oh, okay. Let me just tell y'all something who on here. Coaching is the number one industry.
Yeah.
Coaching is now you don't make me active, but I gotta get out the call. Coaching is the number one industry. It's the number one industry. No matter what type of coach you are. You could be a tax coach. You could be a Schedule C coach. You could be a single mom's coach. You could be a coach in whatever area. Coaching is the number one highest paid industry in the world. Everybody, number three things I tell people in my coaching community, 3 things people will always pay for. Number 1, you show them how to do something new. Number 2, you show them how to do what they're already doing better. Or number 3, you show them what not to do, what you did, what they should not do. They're going to pay. I have paid people thousands to help me not make the same mistakes they made. See what I'm saying? So when it comes to coaching, somebody say, yeah, I don't know my best friend on here, but she's a single mom's coach. Yeah, she on here. She's a single mom's coach. She got a whole community. So
Brianna, I have a question.
Yes, ma'am.
So for your cell phone bill, you can write your whole entire cell phone bill off for the year?
Yeah. If it's a business, I have my line is in a business name. It's not a personal name. So everything in my house is in my business name. The Wi-Fi is in the business name. The sale, because you get more deals when you switch over to corporate things anyway. Like you right now, I guarantee y'all probably paying a lot for y'all phone bill personal. And if you call them and give them an EIN number and you change over to business, your bill is gonna be cut in half. Because they write off when they service businesses.
Right. So you saying even if I have my kids on my line?
Girl, I got 5 lines. All my kids on my line.
Baby, let me switch up.
My kids are employees in my business. Summertime, okay, I hire my kids in the summertime. Their deduction. Remember, you can hire your children and you can hire your children for a cap off a certain number of hours and money. We're gonna talk about that Sunday. Y'all make sure y'all come to the taxpayer class, and they are a deduction. So let's say if I paid Stanley $5,000 this summer, and he didn't do nothing, but he didn't do nothing for me but pack books, made phone calls, did data entry. It don't matter. That's a $5,000 deduction I can now write off in my business as an expense.
So are you saying you put your cell phone in your business name?
Mm-hmm. Call your company and tell them you want to change to a corporate business, corporate line. You're gonna have to have an EIN number. Tell them you want to transfer corporate.
I'm doing it tomorrow. Okay.
Somebody talking about, yeah, girl. What? I have a whole tax write-off. No, literally, no. I studied the tax code. You know, I remember working at Sonic. I never forget it. I remember working at Sonic, and where I was working at Sonic at 14 years old. By the time I was 17, I had this man used to come through the line for happy hour. And that was when the IRS company was like right across the road from where I worked at that time. And I just used to ask questions. I couldn't even file taxes then, y'all, because I wasn't even 18. But I just used to ask different, just little questions. And he told me, he said, you know, it's a tax write-off for me. I said, but you work for the IRS. And he said, no, but I'm my own business. He said, I'm on a lunch break. And he said, you see me, I'm reading through these files. And I was like, so you pull up here every day, you park to go to happy hour. And you look at files so that you can write these happy hour drinks off. And so I started really learning about the tax code at a very early age. And you'll be surprised what the tax code will teach you. Okay, guys. So any more questions tonight before we wrap this training up? I need to go longer. Everybody should receive their logins. If you already are signed up for this year, your software is done, paid in full, you should be getting your logins. Let me just tell you guys, if I don't have your PTIN numbers, your PTN numbers, send those to me, please, so that we can go ahead and add you in the software. I know I need to add you, Erica. You sent me yours. Thank you, Diamond. Erica, you your own business owner, so you have your own PTN. We just need to get your office set up for the year with refund for the bank. Lala, I need your PTN number. Keisha, you already good, girl. You're set up for the year. I actually I think I said we sent your approval out last week. Mr. Maurice, God bless you, man of God. We need to get your office set up for the year. So here's things, guys, for me. I am not working all December. Matter of fact, I just made a supernatural declaration that next week is my last week working for the rest of the year. So my goal is to have everybody offices up and running, especially if you own your own office. We have to go through compliance. We have to go through the tax bank application. My girl Keisha Webb is on here. Webb, she'll tell you. And so we have to get you compliant and set up. And that's not an overnight. Yeah, that's not an overnight thing. I'm telling you. So everybody, remember, it's billions of people processing taxes. We got to get these offices set up ASAP. Okay. But if you just prepares under me, it's the only thing I need is your name, PTN number. We're good to go. Okay. Any questions, guys?
That checklist, that you have that you was going over, will you send a copy out to everyone?
Keisha, are you in my tax group?
On Facebook?
Yeah.
Yes, ma'am.
It's under fire.
About the tax tips?
Yeah. No, my tax group. No, I think you was in my tax group before. Okay, let me make sure you're in my tax group, and it's going to be under files. I add everything there under files.
Okay, now I don't think I'm in your tax group.
Okay, I just sent you a request. And then
Thank you.
You're welcome. And then to my Lala lady, let me send you one too. Oh, girl, you're a Daniels now. I keep saying Webb. Oh my God, that's why I couldn't find it.
It's okay.
She said I'm married now. Okay. Share group link. Okay, I'm gonna drop the link here, guys, too, for those of you, for anybody else who's not in my Facebook group. Boom. And if you say, look, I ain't on Facebook, just hop on for me, just for the group, so that you'll have access to everything. I put everything in the files tab. Okay, you're welcome. Hey, Miss Shantae, is everybody excited? Okay, let me just say this. You need to be excited. Okay, now that the IRS has stopped where people cannot self-file their returns, more than ever, you're going to have clients who need your help. Okay, how you're going to stand apart, and I got to hop on my 8 o'clock tax credit class. How you're going to stand apart is education, y'all. Start educating. Start inboxing. Start a group. Start talking. Marketing is everything. Trust me, people will only buy from you if they hear you talking about something more than 3 times, because they know, yes, ma'am, you can't file your own taxes, because they know you are the expert. Okay, they know you are the expert. And so when you keep talking about something over and over again, who's the first person who's gonna come to mind? You are. And if the only thing I see you talking about is tax strategies, when it's time for me to get my tax did, who I'm gonna think about? You. I'm gonna be like, oh, she knows what she's talking about. I'm gonna go start promoting, start talking to people. Don't wait till January 1st. Yeah, we can start processing loans January 1st we can start processing pre-season loans January 1st for people who already have their W-2. Okay, January 1st. There's a little other stipulations, and they have to go through the bank for approval. It's not like a credit check, but it's bank approval. So it's super easy too, actually. It's really super easy. So people are already texting me today. Like I had one man text me, he got a new number. I was like, who is this? He was like, oh, sorry, I got a new number. When can we get that tax loan? Like January 1st. Okay, January 1st. So get excited, guys. All right. I love you guys so much. We'll be back next Thursday, because we every week now, because we ramping up. Okay, we ramping up. We every week. Also, what I'm going to put in the Facebook group is my social media marketing training. I'm going to put email and automation training for you guys there as well in the Facebook group for my Business Bootcamp University, so that you guys can have that and start utilizing that. Everybody should be educating, doing reels, doing stories, doing Facebook groups. Just go in, okay? Go in. All right? Love you guys too. Hope you have a blessed night. And for those of you all who joining me on the credit class, if you go to somebody who credit is anything below is 700, they need to be on this class tonight because I'm about to drop every gem on how we've been able to remove over $2 million of debt from credit reports legally. All right. God bless you guys. Have a good evening.